We are also working on opportunities that cut across multiple sectors and ITMs. For example, the growing demand for infrastructure in ASEAN and developing Asia offers significant opportunities that span several industries, including financial services, professional services, precision engineering, and construction. Last year, we introduced the IFS non-recourse financing scheme, and the aim was to help more SMEs participate in regional infrastructure projects with risk sharing between the government and banks for loans that are secured on the project's cash flow rather than the SME's assets. This was based on the feedback from the industry and an effort to help our SMEs participate in this larger opportunity. The Infrastructure Office, which Mr. Lau Tia Kiang and Engineer Dr. Lee Bee Wah referred to, is a continuation of this effort. Identifying and structuring infrastructure projects and finding the right partners to finance and execute them remains a challenge both in ASEAN and in the larger developing Asia. Hence, the Infrastructure Office aims to build a deeper understanding of the pipeline of infrastructure projects in the region, promote collaboration between foreign and local enterprises from the entire infrastructure value chain, and facilitate the structuring, financing, and execution of Asian infrastructure projects. The Infrastructure Office will work closely with private sector players, which I think is the point that Dr. Lee Bee Wah raised, in the infrastructure ecosystem, supported by government agencies like Enterprise Singapore, EDB, MAS, and the Professional Services Program Office. In short, the aim is really to bring together the different players in the infrastructure ecosystem that we have in Singapore, from the public sector, the private sector, from the large companies to the small companies, those who do professional services, those who do financial services, and those who can execute the projects, so that we can bring our capabilities together to address this opportunity as a group. Dr. Lee Bee Wah also had some comments on government contracts, and I hope you have filed cuts in the Ministry of National Development because they will be better placed to answer that point on construction contracts. So as a whole, our ITMs are inclusive in their design, not quite bespoke in the way that Mr. Henry Kwek talked about it, but they aim to address the diverse needs of industries and enterprises. But there is the limit to how many of the over 200,000 enterprises that government agencies can directly engage. And that's why we have stressed the importance of partnerships with trade associations and chambers, with the unions, and also with other stakeholders, because they can play an important role to propagate the transformation message and broaden the reach of the ITMs. While competition is the natural instinct of companies, they can also support one another to succeed in transformation. Currently, EDB and SPRING support collaborations between large organizations and local SMEs through the Partnerships for Capability Transformation, or the PACT programs. And the aim is to allow for knowledge transfer from the bigger companies to the SMEs to support them, for capability development targeted at the SMEs, and the test bedding of innovative solutions. On Mr. Lau Tia Kiang's and Mr. Teo Salak's query, to date, EDB and SPRING have supported about 180 projects, which has resulted in about 1,000 partnerships. But I think the important point that Mr. Lau makes is it's also about how has it made a difference for SMEs. It is hard to quantify this because some of the impact is qualitative in terms of capability, but let me use an example. And that is the partnership between Onwa Precision Engineering, a local precision machining supplier, and Schlumberger's Singapore Well Testing Center. And that partnership was to develop high-precision machining for oil and gas production instrumentation. This has created a new business opportunity for the company that now accounts for a substantial portion of Onwa's total revenue. If you take the retail space, the Dairy Farm Group worked with more than 320 SME suppliers to streamline their inventory and supply chain management. The SME suppliers were better able to track product movements and respond to demands or changes in demand, and enjoyed productivity improvements of up to 6 times in terms of the number of deliveries. So in short, the overarching emphasis is really to deliver benefits to our SMEs in terms of productivity improvement, new capabilities that might in turn lead to greater business opportunities, deeper links with their principals, and ultimately to leverage on all of this to go international. In view of the positive experience that we've had, we have allocated $100 million over the next 3 years for an integrated PACT program. In other words, it's bringing the EDB and SPRING programs together to support these and more forms of collaboration among enterprises, to work and grow together in capability and business development. So what sort of programs will this support? First, it will support, in addition to what I've described between the big companies and SMEs, is projects among SMEs and startups, which will now also qualify for support under the integrated PACT. The scope of the PACT will also be expanded to include sourcing for service providers, as well as to promote the early adoption of new technologies among local enterprises. And third, based on feedback from many SMEs on the value of collective branding, resource pooling, and venturing overseas together, PACT will also support such strategic alliances to move into new business areas in both domestic and overseas markets. So in other words, it is helping or aims to help SMEs complement one another as a group as they venture into new areas, whether it's Singapore or internationally. And I think Mr. Thomas Chua acknowledged that the PACT program has indeed benefited SMEs, and there's a good track record in terms of the outcomes. Like our clusters or sectors, our enterprise landscape is also quite variegated. Micro and small enterprises account for a significant majority, with medium and large enterprises comprising only about 4% and 1% respectively of the total enterprise base. Yet, if you look at their share of value add, that has quite the inverse pattern, which is not surprising, but it tells us that on the one hand, we are playing a large numbers game, but with a relatively modest value-add impact. And on the other end of the spectrum is numbers are few, but the value-add impact is significant. And the resources, capabilities, and their employment contributions also vary across this broad enterprise spectrum. So Enterprise Singapore will tailor its programs to the needs of the different segments of enterprises, bringing together the capability building and internationalization functions of SPRING and IE. Mr. Teo Serlak asked how Enterprise Singapore will support companies which are at different stages of growth. First, it will create a more conducive environment for startups by combining SPRING's Startup SG initiatives and IE's international networks. Beyond mentorship and funding, startups increasingly need to internationalize a lot earlier in their development in order to gain access to new markets and also acquire complementary capabilities. Evercom is an example of a startup, and they provide end-to-end energy management solutions to help clients optimize their energy consumption. SPRING provided the company with Startup SG Tech Grant to commercialize its technology. And it also facilitated R&D collaboration with MNCs and foreign players. Evercom also worked with IE's networks to navigate overseas markets. And today, the company operates in both Singapore and Taiwan. And looking ahead, Enterprise Singapore will help Evercom explore new technology collaborations with partners in Israel, Germany, and the US, whilst helping the company expand into the Asia-Pacific region. SMS Co will be able to elaborate further on the broader developments that we have in the startup space in Singapore. Secondly, for companies that are scaling up, ESG will provide support in key areas of capability development. As pointed out by Mr. Saktiandi, many SMEs still require assistance for essential upgrading before they venture overseas. ESG will work through TACs and industry partners to support them. This includes the SME centers whom Mr. Chua referred to, which will continue to be a very important channel for ESG's SME engagement. ESG will also use the new Productivity Solutions Grant to support the adoption of pre-scoped solutions and this is so that the broad base of SMEs can use them to improve their operational efficiency and productivity. SMS Ann will be elaborating on these points. Access to financing is also critical for long-term growth. ESG will continue Spring and IE's partnership with our financial institutions to meet the working capital and growth financing needs of our SMEs and to facilitate access to credit lines and insurance cover for trade and projects in overseas markets. In addition, I'm pleased to announce that the Enterprise Singapore will extend the pilot venture debt program by 3 years till March 2021. The venture debt program enables local high-growth enterprises to finance their expansion plans with less equity dilution. 17 companies from quite diverse sectors have benefited from the program since its launch in October 2015. Thirdly, Enterprise Singapore will support companies to seize overseas opportunities to grow through several internationalization initiatives. The importance of internationalization is borne out by a survey of Singapore's investment abroad by the Department of Statistics from 2006 to 2016, which shows that income from our companies' direct investment abroad grew by 6.3% per annum, higher than the 5.1% per annum growth in profits from their operations in Singapore. And looking ahead, one must expect that this differential growth will continue given the nature and pace of opportunities in the region around us. Enterprise Singapore will also enhance IE's network of overseas centers to help Singapore companies navigate the business and regulatory environment in overseas markets and gain insights and also access to networks with local partners. The Market Readiness Assistance Scheme helps companies defray the costs of foraying into new markets. We raised the grant support from 50% of qualifying expenses to 70% from the 1st of April 2015 to 31st of March 2018. Mr. Saktiandi and Mr. Sito Yipin would be pleased to note that we will be extending this higher grant quantum for a further 2 years till 31st of March 2020. As Mr. Saktiandi has observed, to be successful, our SMEs must also be able to navigate different languages and cultures, as well as social, political, and legal systems which are quite divergent. The ASEAN Leadership Program will help Singapore business leaders acquire a deeper understanding of Southeast Asian markets and the skill sets to lead business expansion in the region. Senior PALSEC Low Yen Ling will elaborate on this and other related programs to develop manpower capabilities. Ultimately, for our companies to scale up to the next level of growth, capability development, innovation, and internationalization are deeply intertwined. We see this with companies like Jingking Technology Private Limited that has established itself in chip cards and SIM cards globally. To expand their business, the company has been exploring research and development in biometrics, electronic payments, and data security. They have built a dedicated R&D team in Singapore while seeking new opportunities in Vietnam, Philippines, Indonesia, and Thailand. Throughout this journey, they have tapped on government support, including Spring's Capability Development Grant, as well as IE's Global Company Partnership Scheme. To better support companies like JK Tech Scale Up, we will consolidate the CDG and the GCP into the Enterprise Development Grant in the 4th quarter of this year. Mr. Liang Enghua and Mr. Teo Salak have asked how this will benefit companies. I think Mr. Teo already knows the answers because he was navigating this terrain when he was in MTI. Nevertheless, the EDG, this Enterprise Development Grant, will give companies the flexibility to bundle internal upgrading activities, domestic projects, and international expansion plans in one application. In other words, you're able to, in a more flexible and integrated way, plan and seek out government help for your business strategy. Even as we pursue these internationalization and growth strategies, I agree with Mr. Leon Pereira that succession planning is an important issue for SMEs, especially the family-owned businesses. In this regard, as Mr. Pereira has already highlighted, there are several resources that SMEs can tap on. This includes information on succession planning and key issues to look out for on Spring's SME portal. They can also use the new Enterprise Development Grant to engage consultants to help them develop the succession plans and address strategic priorities and leadership gaps. They can also strengthen their leadership pipeline through leadership and management courses which are available under Skills Future, Singapore. But I do want to stress, because I think Mr. Pereira made the point about can succession planning be a condition for some of the government schemes? And I think that may tilt the balance, because whilst we can encourage it, we can urge companies to think about this seriously. Ultimately, the business owners have to take ownership. They have to decide and prioritize that succession planning is something that is of high priority, and then undertake specific steps to put that in place. So I think we have the toolkit, we have the general messaging, and I think the entire gamut of stakeholders, whether it's our trade associations, whether it's consultants, and certainly government department officers, they will impart the message, but I think we have to leave it to the business owners to ultimately make the choices and execute and act on them.